Bitcoin has recently dipped beneath $100,000, and given the current global uncertainty, it's leading many investors wondering and potentially worrying about what could be next for BTC. But here we'll focus purely on the data to simplify your analysis with just the updates you need to know. So we'll jump straight into it with the short-term holder realized price chart we have here on BitcoinMagazinePro.com. Now if we just zoom in over the most recent cycle, what we can see is this level has acted as a very key level of moving support and resistance for the Bitcoin price action. And especially over the past few weeks as Bitcoin rallied to new all-time highs at around $111,000, $112,000, we could see that this was climbing to around 95 up towards $100,000. And as we can see, and as I've just said, every time we've come back down and retested this line throughout the Bitcoin bull cycle, it has acted as a very key level of support until we've broken beneath it, and then it's actually acted as resistance every time we've been beneath this. But if we just zoom into the most recent price action here, we can see as we were approaching and actually claimed new all-time highs, of course everyone's incredibly bullish, calling for even higher highs, but realistically anytime we run up pretty much non-stop from the mid $70,000 to over $110,000, probably makes sense to have just a little bit of a cool off. So I know this doesn't feel great to see the Bitcoin price action decreasing, but realistically a 10% drop just to the short-term holder realized price, a very key level of support, is a pretty healthy pullback in my opinion. If we go over to TradingView here, what we can see is the Bitcoin price as it came down from, like I said, over $111,000. The low on this daily candle was $98,330. Now, if we go back here, we could see that the price of the short-term holder realized price being $98,360, $98,220, around that region, it pretty much perfectly retested this level. So I'm not worrying about anything. We've actually had a pretty nice rebound now to over $105,000. And if I just go back to the TradingView chart here, what we can see is if I add on this box here, which is a pretty key level of support we should be watching, we can see we basically just came back down, retested a zone of support that had previously acted as resistance. And what I can also do is if I just add on these ribbons here, we can see the 50-day moving average, which is actually currently maybe acting as a little bit of resistance as we've just rejected from this level. So that'll be a key moving average to watch over the coming days and weeks. But what we can see is this 100-day and 200-day moving average slowly moving up in unison, which will hopefully provide a nice amount of confluence support along with the short-term holder realized price, again, probably around this $100,000 region. So we have multiple levels of confluence of support around this $100,000 region for Bitcoin. Now, this is really what we want to see, not just one metric pointing towards a lot of incoming buy pressure and and interest coming in to provide some support for the Bitcoin price action. But once we see multiple levels, multiple moving averages, multiple technical levels of support and buy pressure, the short-term holder realized price, looking at on-chain data, these all provide some confluence that this recent bounce we've had is something that can hopefully be sustained. Now, I know a lot of this uncertainty and a lot of the drawdown was due to the fact we've had, like I said, some global uncertainty. What we can see is if we just go to this chart here, we can see, of course, this is all stemming from the potential conflict that we're seeing in the Middle East. Now, it makes sense if we're seeing a lot of potential conflict, rumors of a World War III. What's the first asset that many potentially more defensive investors are going to be looking to offload? Well, it's the one that's likely the most volatile, the most speculative, the one with the smallest market cap. And for the time being, that is Bitcoin. This is something we are just going to have to deal with. But what we can see is people may be getting a little bit ahead of themselves. If we look at the Bitcoin funding rates, we can actually see that the funding rates have once again turned negative. So even though we did see a little bit of a sell-off, we saw some people obviously taking some profit, maybe panic selling as we hit that short-term holder cost basis, the average accumulation price for new market participants. We were seeing active traders betting on further downside. Now, what we can see, as most of the metrics tell us, is that counter trading, a vast majority, typically leads to outperformance. If we just highlight regions of sustained periods of negative funding rates, indicating a majority of leveraged traders on perpetual futures contracts are betting on further downside, we can see almost all of these instances have led to further upside price action in the almost immediate future. This is a great counter trading indicator, and the fact that so many people are piling into shorts as we've just made a new all-time high, as we've just had a very normal standard pullback in price action towards a confluence level of support, again gives me some confidence that we don't need to take into account all of this speculation, all of the predictions, all of these doomsday bear posts, because realistically the data just isn't pointing towards that. If we look to the value days destroyed, what we can also see is a little bit of this most recent sell-off was primarily driven by people taking profit. Of course, as the Bitcoin price massively increases to new all-time highs, it's very healthy within a bull market to see people that bought at $10,000, $1,000, $100 per Bitcoin begin to take a little bit of profit. And what we can see looking at the value days destroyed chart, throughout this cycle, it has just perfectly worked. It has perfectly told us the periods where we should be accumulating, where Bitcoin may be at a bit of a discount, and periods where we may be a little bit overextended to the upside, and where some long-term, large-scale, experienced market participants are beginning to take some profit. Now what we can see is when we're in the green areas here, if you'd have bought Bitcoin when Bitcoin was just in these green areas on the value days destroyed, you'd have outperformed a vast majority of people trying to come up with some crazy strategies for accumulation, people just going on their gut instinct or taking into account fundamental news events that are just pure speculation, following their favorite Twitter gurus. And if you'd have taken profit, or at least maybe just reduced your dollar cost averaging amount, remember, you don't have to sell your Bitcoin. You can just maybe more strategically time your accumulation purchases. What we can see, if you'd have just avoided accumulating during these periods where Bitcoin was maybe a little bit overpriced, again, you'd have done pretty good. And what we can see over the past few weeks, as Bitcoin rallied from $74,000, $75,000 to a new all-time high, a very substantial run-up in price action, we can see people were taking some profit. This led to the Bitcoin price action maybe being a little bit suppressed, having this little bit of a drawdown period. But now, if I just remove all of this, we can see that this is now coming down towards these green levels. The profit taking has massively reduced, and we can see that reflected in the Bitcoin price action. We've made what seems to be a bit of a local low and almost immediately had a very positive reaction in the Bitcoin price. One thing we do have to acknowledge is if we just look at the Google Trends chart here, is realistically there's not a huge amount of people, a huge amount of retail, I should say, interested in Bitcoin right now. Now, if I just bring up this chart here, so all I've done here is just overlay that Google Trends interest in the search term of Bitcoin with what we can see on the chart here. Now, immediately, again, it becomes pretty obvious that when the retail interest in Bitcoin is incredibly low, when there's very few people, very few retail interests, new buyers coming into the market, this is actually a period of great opportunity. If I just outline the level we've recently hit, the very low level of retail interest we've just hit, and outline the periods on the chart where this was comparable, we can see in all of these instances, it was periods of time where Bitcoin was a great accumulation region, was in a great accumulation region. It's been a long day. What we can see is, for just following all of these periods, it was just before a big run up in the Bitcoin price action. And usually we see these periods of low retail interest when Bitcoin is at the tail end of bear markets, or we've had huge extended periods of very minimal volatility. Yet we've just set a new all-time high and we're seeing a very low amount of retail interest in Bitcoin, which again gives me some confidence that once we do start to see some more retail interest like we saw in 2024, just over a year ago, post ETF announcement, once Bitcoin first broke $100,000 and we get multiple consecutive weeks of incredibly bullish price action where price doubles in just a matter of weeks or a month or two, this is going to be incredibly bullish, and we have that potential right now. And if I just go back to the charts here, what we can see, this is the Bitcoin price action versus the US dollar strength index, or DXY Dixie. And what we can see, again, this is giving us some confidence that the macroeconomic conditions are again continuing to be favorable for Bitcoin. What we can see is, if I just draw on a line roughly around here, this has been a key level for the US dollar strength index. And because of the inverse correlation we see, once one's moving up, typically once we see the US dollar strength index increasing, we see the Bitcoin price really struggling and having these big drawn out bear markets. However, on the contrary, once we see the US dollar strength index continue to plummet, we see the purchasing power of people's dollars continue to decline. This is when Bitcoin has its most violent upside moves. And what we can see is we've recently broken beneath this very key level. And what we can do is we can assume that this is going to continue, given the fact that we're seeing the US president saying he wants a weaker dollar to try and boost the US economy, try and reduce the deficit and try and reduce the debt commitments that the country has. We can see that this is likely going to continue far to the downside. And especially considering we've recently just moved up, rejected from this level, we can do some technical analysis on the US dollar strength index as well. We've seen a rejection and once again immediately moved down. This is again giving us some indication that price can hopefully have some positive influence following this negative downwards move in the US dollar strength index. And this has also been reflected by the high yield credit sentiment. This is almost like a fear and greed index for traditional market investors. This is looking at the current appetite for for these higher yielding, these higher risk corporate bonds. What we can see is this has a very positive influence on the Bitcoin price action once this is increasing. Once we see people in a more risk-on sentiment, a little bit more speculative, willing to put their capital into slightly more volatile plays like Bitcoin, this has usually had incredibly positive reaction in the price action. Now what we can see is recently we did have a big dip on this, which makes sense, as I said, given all of the recent uncertainty we've seen. And this coincided almost perfectly, if I just line these up a little bit, they're almost one-to-one correlated. We can see as soon as traditional market investors are getting a little bit wary, once we can see a huge decrease in the sentiment and appetite for high yield credit bonds, this coincides with Bitcoin's price action having this rapid decline. However, recently, as this has moved up, Bitcoin price has also seen a positive price action. And this sentiment shift, this positive bullish outlook in traditional markets is also likely primarily driven by the fact that we've recently seen a huge expansion in global liquidity. The global M2 money supply continues to accelerate its expansion. And what we can see is immediately this almost always has a very positive influence on the Bitcoin price action. And I know people look over the past few days and say, well, we're not tracking M2, we're not following global liquidity anymore. But this isn't something where we have to micro-analyze every single hour or every single day. Just zoom out and look at this M2 versus Bitcoin year-on-year chart and the correlation, the influence of global liquidity expansion and the positive reaction we see in the Bitcoin price action is incredibly clear to see. And it would not surprise me, and I entirely anticipate Bitcoin to follow in what we've seen throughout every single one of Bitcoin's price action cycles, where as long as this continues to increase and as long as we don't see some horrible, massive downtrend in equities, then the Bitcoin price is due to catch up. Now I say as long as we don't see some huge, terrible influence in the equity market, and that is again due to the correlation that we are seeing with the S&P 500. Now a lot of people over the past few days and week or so, due to the conflict uncertainty, were anticipating the S&P 500 yesterday, the weekly open, to have this huge gap down and signify the start of a massive downtrend, but price actually spiked to the upside. We're not seeing this huge negative bearish fearful sentiment that many people anticipated last week and over the weekend. And this is why you really need to focus on the data. Because if you'd have just invested based on your gut feeling, your gut reaction, your gut instinct, we're programmed to be risk averse. Whereas if you just focus on the data, it removes this noise, it removes that uncertainty. Suddenly you're removing that unconscious bias that has been influenced by online influencers and market analysts and stuff. As much as I'm trying to tell you my current opinion, you should go and do your own analysis as well, because all I'm trying to do is relay the data that I'm seeing. But if you can look at the data and you have a slightly different interpretation, then that's your analysis and you shouldn't take into account everything else you're seeing online. You should purely trust the numbers because it removes all of the guesswork and it really simplifies a lot of the process. And one positive thing as well we've seen is, even though we've seen this uncertainty, and a lot of people, like I've even said before, may look to Bitcoin as the first asset that they really offload in favor of more safer hedge assets such as bonds or gold. If we look at the ETF daily flows, we've actually had over 2 weeks of consecutive positive net inflows for these Bitcoin ETFs, which is incredibly bullish to see. Bitcoin is slowly fulfilling its narrative of a hedge asset, as a safe haven asset. In spite of all of this uncertainty, you would have guessed a few years ago, if we were on the potential brink of World War III, we'd be seeing days and days of consecutive hundreds of millions of dollars, totaling probably around $2.5 billion of inflows over the past 2 weeks alone into Bitcoin ETFs. People are now finally seeing Bitcoin's potential. People are finally waking up to the monetary policies that are negatively influencing the purchasing power of people's fiat currencies and are looking to Bitcoin as the solution. So I know this was a lot to cover, and I took into account lots of data points and charts saying I was going to simplify everything. But realistically, all you need to look at is the data. All you need to look for is confluence, and all you need to do is focus on the numbers and try and remove any external noise. Try and remove those biases and personal interpretations. Because realistically, if you were to look at the news and nothing else, you'd think the world would be in a terrible place and everything would be down 50, 60, 70, 80%. Yet everything is just continuing to climb upwards because the markets, Bitcoin, the S&P 500 gold are not necessarily a reflection of the global economy or anything like that. They're a reflection of supply and demand economics. And Bitcoin is so unique in that we can see the supply and demand economics in real time. It really can be incredibly simple. So just to summarize, Bitcoin recently dipped beneath $100,000 before rebounding strongly to where we currently sit at around 105K. Now this is mainly due to the current uncertainty in the Middle East. Now, I'm not going to go too much into the current situation or the politics involved with all of that, but of course, anytime there's murmurs and rumors of potential global conflicts, it of course is likely going to cause a little bit of disturbances in investor confidence. However, what we can say is by purely looking at the data, removing all of the external influences and noise, Bitcoin remains strong. The supply and demand economics of the market look increasingly positive. And remember, the news doesn't control the price. All that matters is how much investors are buying and selling. And what we can see is looking at ETF inflows, looking at the reduction in profit taking from long-term holders, is that Bitcoin is not in a place where people are excessively selling due to fear. In fact, what we can look at is something like the retail interest in Bitcoin and some other charts which we didn't have time for today, which outline the current inflows into the market by new market participants. And we can see that they're not actually that high. So Bitcoin is really primed for a huge substantial move higher as long as we don't see a big black swan event in the S&P 500. Of course, I've said all of these positive things, but realistically, we are still incredibly positively correlated to the S&P. So if we do see some huge global World War III and we see the S&P begin to absolutely tank, of course, Bitcoin's gonna struggle. But realistically, taking into account all of the data, ignoring what could happen, we don't want to predict, we want to react. What we can see is that the data looks strong. And if you like this video, please check out BitcoinMagazinePro.com, where all the charts we discussed today, as well as many more, are all available. And as well as that, please check out our most recent video that you can see here, where I interviewed the Rational Root to discuss Bitcoin's 4-year cycles, markets, and on-chain data in general. And I just think it was a great interview. So if you haven't already, definitely check it out. It's one of the best chats we've had on the channel for a long, long time. And let me know in the comments below and on social media what are your current thoughts on the Bitcoin market. Do you think that things are maybe slightly leaning bullish? We've just had a little bit of a blip in price action, or do you think that this is the start of a much larger, greater, deeper retracement? Thank you all very much for watching, and I'll see you in the next one.